Hi students, in the last class we discussed the methods on the valuation of goodwill. Okay, in the last class we saw the weighted simple average profit methods as well as the weighted average profit method. Okay, so in this session we will see now the capitalization of average profit method. Okay, so now see the second one is which is the capitalization of average profit method. So now see it's under this method the future maintainable profits of the business are capitalized by applying the normal rate of return. Okay, so under this method we have to calculate the goodwill value. Okay, we have to calculate the goodwill value with the help of this future maintainable profits as well as the normal rate of return. Okay, so in this there are two concepts, which is the net assets approach and the actual capital employed approach. Okay, so now see what's the formula for the net assets approach. With the help of this net asset approach, how to calculate the goodwill. Okay, so now under net assets approach the following steps are to be followed. Okay, so now see if we have to ascertain the goodwill under this net asset approach. So goodwill is equal to capitalized value business. What's capitalized value of business minus net tangible assets. Okay, so this is the CVB, means what's capitalized value of business. Okay, minus net tangible assets. NTA means what's net tangible assets. Okay, so now for this calculation of the goodwill we should know capitalized value of business. Okay, we should know capitalized value of business. Now how to ascertain this capitalized value of business? Capitalized value of business is equal to FM divided by NRR into 100. Okay, so FMP means what? Future maintainable profits. Okay, so now see here is given future maintainable profits divided by NRR means what's normal rate of return. So here given normal rate of return into 100. Okay, like this we have to calculate the capitalized value of business. Okay, now how to calculate this? Net tangible assets. If it is given directly, then you can get directly. If it is given the total tangible assets minus outside liabilities, you have to do, and you will get the net tangible assets. Like this you have to ascertain the value of goodwill under the net assets approach. Okay, so now see some formula for the actual capital employed approach. Okay, so now see goodwill is equal to normal capital employed. What? Normal capital employed minus actual capital employed. Okay, so actual capital employed means ACE and the normal capital employed means NCE. Okay, so now see how to calculate. We should know for calculation of this goodwill we should know the NCE. Okay, so NCE, how to calculate the future maintainable profits divided normal rate of return into 100. Okay, and so this actual capital employed, how to calculate? Paid up capital plus reserve and surplus minus goodwill at cost. Okay, like this ascertainment of the ICP. Okay, it means what's actual capital employed. Okay, so now see just try to understand these concepts. Okay, so on this we will solve the problem. From the following particulars, compute the value of goodwill of Vijaya Company Limited. Okay, so future maintainable profits is given 15,000, normal rate of return on capital invested rupees 15%, and the value of net tangible assets is rupees 65,000. Okay, so like this they are given. So with the help of these informations we have to solve the problems. Okay, we have to solve the problems. Now see how to calculate this capital in first of all you should know that the formula to calculation of the goodwill. What is the formula? Capitalized value of business minus net tangible assets, and we should know the capitalized value of business. How do I calculate the capitalized value of business? Capitalized value of business is equal to future maintainable profits divided normal rate of return into 100, and the future maintainable profits is given rupees 15,000. So take it 15,000 divided by normal rate of return is 15%, so 15 into 100, so rupees 1 lakh is what's capitalized value of business. Now put in this capitalized value of business is 1 lakh minus net tangible assets, and the value of tangible assets is given 65,000. So put it here under this net tangible assets 65,000. So now calculate the goodwill. Goodwill is equal to 1 lakh minus 65,000 is the answer is what? 35,000 is the goodwill value. Okay, so like this you have to calculate under the net assets approach. Okay, so now see how to calculate the actual capital employed approach under the goodwill. So now see, from the following details, compute the value of goodwill of Sai Company Limited. Okay, future maintainable profits rupees 24,000 is given, and normal rate of return on investment at 12% is given, and the actual capital employed in business rupees 1,60,000 is given. Okay, so now with the help of this information we have to ascertain the goodwill value under the actual capital employed. Okay, under the words actual capital employed. Okay, and you know that's what's the formula for the calculation of goodwill: normal capacity employed minus actual capital employed. Okay, how to calculate this normal capital employed? Normal capital employed is equal to future material profits divided by normal rate of return into 100. Okay, so now in this case just see here, the normal capital employed is what? Future material profit is 24,000. Normal rate is the 12% into 100. The answer is what? NCA answer is what? Rupees 2 lakh. Okay, so now how put into this NCA normal capital? How to calculate the goodwill? Goodwill is equal to normal capital employed minus actual capital employed. So normal capital employed is 2 lakh minus actual capital employed is given rupees 1 lakh 60,000. Take 1 lakh 60,000. 2 lakh minus 1 lakh 60,000 is rupees 40,000 is the remaining amount. So this 40,000 is equal to the goodwill. Okay, so like this, actually we have to calculate the goodwill under this both the approaches. Okay, so this capitalization value, so it is very important. Okay, so in the next class we will see the remaining part. Okay, so thank you.